Today we're going to talk about the high bull and the low bear. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Thursday, we've had some huge moves this week. I've had some traders email and comment that they're really starting to put this together in terms of numbers, timings, high and low. We've had some range-bound days in terms of a couple of messy pairs. And one of the questions that I got that's a really great question was, how do I tell if it's just a pullback or if it's a reversal? And today we're going to review our simple system. We're going to talk about the high bull and the low bear, which I've mentioned in other videos, but we're going to go in a bit more in depth into that and how that can help us discern certain setups specifically with our simple steps, and also looking at the highs and the lows of the week and how that can play a role in helping us lock in that together. So let's get into it. So we talk about, again, the big picture, the structure. Are we in a rectangle? Is there 3 pushes? Do we have 2 peaks, an M, a double top, a descending triangle for a sell setup, an ascending triangle for a buy setup, a squeeze? We've had a couple of interesting scenarios. We had the news on the pound New Zealand. Another question, when a market blows out like that, people say, I just ignore it. We're going to talk about how we can reassess that as we head into the next session after the news spike as well. So again, first thing we look at is structure. Just to take an example, pound New Zealand yesterday, they have news. The market has a 100 pip spike. We wait for that spike and then we go back and start again. We redraw our highs and lows. One of the easiest ways that I look at a market, and we talk about identifying profitable trades, is to look at the highest bull candle and the lowest bear candle. That can give us some great insight, not only into if there's already perhaps a peak formation low or high in place already for the day or for the session. So what that means is that when we look at an existing high or an existing low, there will often be an engulfment. Now this is really important because it's not just about the high and the low. It's about the highest bull candle and the lowest bear candle. So if your high, if your peak structure does not involve a normal bear candle engulfment, then that is not what I consider to be the highest bull. So it can involve more than 2 candles. We could have 4 candles, as much as 4 or 5 candles before this high bull is engulfed. And what's important about that, again, comes back to understanding the hourly rotation and also where we're at in relation to the high and low, not only of obviously of it's the high of the day or the low of the day, but potentially if it's the high of the week or low of the week, because that has a greater impact on where we're at in relation to the timings. So yesterday's markets were a great example. And just to reiterate, if you want to look more at this, you can look at John Carter's Mastering the Trade. In his book, he talks about the Hope Lope setup. Okay, so Hope Lope means high of the low period and low of the high period. Now, I've simplified this for my own in terms of the day-to-day usings of the 15-minute charts. I look for the highest bull and the lowest bear, because that will often give us an important level that the market will protect for selling or protect for buying. So that means that that market may trade into this level, but it never violates going past that lowest bear candle, or it never violates going past that highest bull candle. So again, just to review, structure, we're looking at our big picture. Do we have a possible sell scenario? Are we up high for the week? Are we down low for the week? Is this possibly a rectangle for a continuation or a reversal? Is there a double top or a double bottom in place? Have we had 3 peaks? That sort of scenario. We're looking for bigger geometry because that's what allows us to look for the measured move potential if that market trades. So as we head towards the later part of the week, now we're starting to go from a range on Monday, Tuesday, Wednesday, Thursday, Friday perhaps, where we have a high of the week and a low of the week for potential movement in terms of risk reward. So in some cases, if this market is going to reverse back to the low of the week or go to the high of the week, now our risk reward can significantly increase in terms of having a 1-bar stop and maybe 5 to 10 times the return if the market moves from one extreme to the other. So the timings are really important. Now I mentioned something in my PDF the other day about 717. I haven't talked a lot about that, but it's similar to 915. 717 is 7 p.m., 1 a.m., and 7 a.m. That's the hour prior to our 12 candle window. A lot of traders have started to notice that there's often a stop hunt in the hour prior to the 12 candle window. It may be before the US session, it may be before the Europe-London session, but in a lot of cases that sets up for a first hour trade in our 12 candle window. So that 717 is where I will look for a stop hunt with the 1, 2, 3 into the trend or to the high or to the low for a possible setup in that first hour. We'll just put first over here. So if the market extends out, we have our 3-hour high and low. So again, in our 12 candle window, if we come from Asia into the Europe-London Open, and we're inside of that 3-hour high and low, those are typically the easiest to notice, obviously, a stop hunt or a breakout. But when a market extends outside of that 3-hour high and low, we talked about now thinking in the hourly rotation, because now we're into the next 3-hour window. So if we do the math in our heads and the market is trending, we want to be looking at the hourly rotation and then looking at high bull and low bear the closer we get to the next 12 candle window. We're going to go through some examples today. So what I mean by that is that we will typically see a reversal or a pullback. So again, a pullback will typically be 3 pushes into a trend or 1, 2, 3 into a strong trend. But a reversal in an extended out market will often go sideways and give us a high bull engulfment or a low bear engulfment at numbers just prior to that next 12 candle window in that 717 time frame. So we're going to go through some examples from yesterday, but really important because we're at the high of the week on some of the pairs. And that's when we will have the highest probability of seeing that reversal occur the closer we get into that 12 candle window. So we've looked at examples before where there's been an engulfment or a reversal already as the US session 12 candle window begins. That's because the market has already locked in a high or locked in a low for a reversal type setup in the next 12 candle window. So as that market extends out further, the hourly rotation in your head, you should be thinking 4 candles. So if you have a high or a low, each hour you're looking to see if there's an indication from the market of either just a consolidation and a pullback or an engulfment reversal that coincides with that hourly rotation just prior to the next session's window. So 4 candles, that hourly rotation, if typically most of those reversals or trades set up in the first or the last candle, that's because that's when the hour closes. So if we have an engulfment and the market respects that heading into the next 12 candle window, we now have our 1-bar stop. Now some traders have asked about limit orders. I've mentioned that before. I like to limit order either at numbers or with a 1 candle stop if it's already locked in place. So I always try to fight for a better fill. I don't always get that. But that's where just preparing and being really focused on one or two setups that are ideal to me at the time, and then looking to how I can best execute to enter that trade setup with a 1-bar stop or a 1 ATR stop, either near numbers or with a 1-bar stop after the engulfment has taken place as we head into the next 12 candle window. So that hour before will typically already have been the reversal or the stop hunt to the high or to the low. And again, we'll go through some examples about that today. So again, we're looking for structure. Are we in a sell type setup or a buy type setup, or is this a trending setup? Then I look at the high and low of the day. If that's extended out, then I'm looking for the high bull or the low bear coinciding with that hourly rollover. As we get closer to the next 12 candle window, that's when I'm really starting to pay attention. And in that middle hour, when the markets open, the equity markets, that's when I'm really looking for if the market is at the highest point of the day or the lowest point of the day, and have they given us an indication that it's going to continue to trend or reverse. Then I'm looking at the numbers. Am I wanting to get filled at the numbers, or am I looking to get executed with an existing engulfment that's already in place? And again, that hourly rotation in that 3-hour window. Engulfments and pin hammers. And recently we've been getting a lot of pairs that have had both in the confirmation of that trade. Very powerful signals. So again, the high bull, it could be 4 candles. It might be a couple of candles beside the bull candle before a bear candle takes out the low of that bull and closes. It needs to close below. It has to close below the highest bull. And any bull candles that trade sideways or inside of that window need to close to confirm that above the high of that lowest bear candle. So if you get a big bear candle and the market trades, that is most likely a false low, getting traders to chase it further away from the extreme for the move back through. But when you get an extension and a normal bear candle that's engulfed and the market trades sideways, and it'll usually be near numbers, that typically may be locked in for the low of the session and possibly the day, and the same thing applies for that highest bull candle. So again, structure, high and low of the day. As we get later in the week, we're paying attention to the high of the week and the low of the week. The timings, the 12 candle window, 717 typically can be a stop hunt, either to the high or to the low or back against the trend. And if not, then we're looking at that 12 candle window to be our stop hunt trap in that first hour, possibly trade reversal or continuation in that second hour, or if it's an extended out move in that 12 candle window, a 3rd hour trade setup. 915 we've talked about, when the 15 minute, the 1 hour and the 4 hour all are rolling around at the same time. But again, remember that the hour prior maybe or that first hour can often be the stop hunt. So you might get the stop hunt trap in that first hour, but the 4 hour chart rolls over in that time frame when these all coincide. Round numbers, engulfments and pin hammers, and the hourly rotation. Let's take a look at some examples. Again, fantastic feedback, some great results from traders. The next part we talked about was psychology, getting yourself over your own mental barriers, your own mental hurdles, to eliminate self-sabotaging behaviors and maximizing performance, and just constantly working on ourselves to move in a direction of constant progress, setting goals, working at incremental improvements day after day after day, not taking our foot off the gas, focusing on constant progress. Thanks for hitting the like button. I appreciate all the great feedback. Stay disciplined, traders. Let's look at some examples. Have a great trading day, and may the markets go with you.
G'day traders, Stacey Burke from Stacey Burke Trading, just continuing our discussion on high bull and low bear. And again, we talk about identifying or marking off existing profitable trades from previous sessions because the market will often be moving to those levels in either a stop hunt or a trending capacity. And marking the high bull and low bear, in a lot of cases, they may be the same candles, but in the current day and live circumstances, this is something that I use. It gives me an indication if the market is possibly reversing, especially as we head into a new 12 candle session, or if it is in consolidation, whether or not that consolidation is protecting a level. So for example, if the market is going up and the high bull candle does not get broken, that means that could possibly be continuing. So just a little extra tool to put in your toolbox as just a good indicator of whether the market is locking in a level for a possible reversal or if it's respecting a level for a possible trend continuation. So just going through yesterday's pairs, the pound Aus, heading into the Europe-London 12 candle window, we have our existing low bear. And also traders have possibly gone long off of that engulfment prior to heading into the Europe-London window. So there's an engulfment in Asia. Traders may have gone long. They may have gone into the numbers. They may have, had an existing stop below this extreme. So again, we talk about marking off the high of the day, the low of the day. And we mark off our existing engulfment from the beginning of the session. There was a couple actually on the pound Aus. So we had shorts in prior to the 12 candle window. Then we had them again just at the 12 candle window. So if we have a level where there's been an engulfment, again, the market traded sideways in between the engulfment prior to the 12 candle window and then inside of the low bear candle engulfment where traders went long. That market then proceeded to trade sideways. And again, we have our smaller geometric structure inside with that swing high and then an engulfment in the last candle of the first hour. So again, not at numbers, but the original move started in that first hour off of numbers, but also off of the lowest bear candle. So some traders may have already traded this, from the existing long move off of the Tuesday night session. But again, the market takes out the high, the existing high, and we have a high of the week in place and a low of the week. We also are inside of the high and the low. So if we back this chart up and we look at the Monday, Tuesday, Wednesday, we're in the middle of that range. So one of the things that if I am ever in the middle of a range, I want to be trading with the trend. And obviously in this particular situation, traders could say, well, the trend was down, then it was up. But so here's an example of where if you're not sure, the market hasn't taken out a previous level in terms of a daily high or low, but we did talk about 25 pip increments, and that's a 75 pip pullback from the closing high of the session. So again, just another little tool in the toolbox, which I put in the notes: 3 levels of rise, 3 levels of fall. Is it a 25 pip box or is it a 50 pip box? So we have an engulfment that starts the 12 candle window off for shorts. Shorts are in the market. They've sold off. There's obviously stops above the swing high. There's an engulfment off the numbers. Then there's a second engulfment into the 12 candle window. And then there's a reversal engulfment. So traders that are short are waiting for this market to go down. It's got another 3 hours and it does not take out the low. Traders are long inside, possibly off the engulfment, off the low. They've gone long. It hasn't gone anywhere. It's gone up again. It hasn't gone anywhere. Stop hunt to the middle structure low, sideways at numbers, and then a pin hammer engulfment breakout in the last candle of the first hour. That market breaks out, pulls back to the numbers on top of the breakout, goes sideways, and continues the move. The market proceeds to move up 100 pips basically, but this is where the high bull can play a big role because the market has extended out. It's not quite at the high of the week, but for all intensive purposes, it is at the high of the week, and we get an engulfment. So we're outside of our 12 candle window, but we now have a high bull that's been engulfed. So in that particular instance, if this was to fail and it was just a pullback, so somebody asked, how do we tell the difference between a pullback versus a reversal? Typically in a strong market, a pullback will be a 1, 2, 3 or a 1, 2 and continuation. This market, as we headed into the 12 candle window, broke through the double zeros before pulling back with a bullpen hammer, dropping down to the 25 pip increment, pulling back and extending down, exhibiting a stop hunt. Now again, who's in profit? We know who's in profit. The original bull trader from the Europe London Open. So stop hunt down. Remember, they're going to go back and get the people who are in the money. So when we see this high bull engulfed in our 717, so at the end of that second hour outside of our 12 candle range, the market goes sideways, 1, 2, 3, and then 4 on the last candle of the third hour into the heading into the 12 candle window. The U.S. session 12 candle window opens with a bear pin hammer off the double zeros, and again, off round numbers for the stop hunt down on traders who are profitable from the Europe London session. So again, traders, just an example, not saying that you would have traded this, but again, who's in the money? The market's going to go back and stop traders who are in the money. And again, this high bull gave us, so we're not trading in here. You might have traders may have traded this, but if you came for the 12 candle window, the market was already in an existing down trade. Very important. And you'll notice 1 push, pull back, 2 pushes, pull back, 3 pushes down, and an engulfment at the end of the 12 candle window. So as we head into today's session, we have a low candle, a low bear candle that's been respected. The market has traded into this level and continued up, and we also have a high bull candle. So at some point, one of these levels will be broken. And when the market trades inside of these ranges, most likely they're going to be trading through them. So again, we got our high bull and our low bear, and we're now in consolidation inside between 75 essentially and double zeros. Pound New Zealand was very similar. We had the big news candle, and traders asked, well, when a market does that, I just ignore it. And what I suggest to them is just redraw after the news candle, redraw your highs and lows. So again, this same exercise of the low bear and the high bull comes into place. These two bear candles are very similar. We have a peak formation low in place. The level is what matters. So regardless of where you draw your line, we have our low bear. The market breaks out. We get a peak put in place for a high bull, our highest bull candle. And this was an example again where I talk about a market that takes more than one candle to engulf. There's a 1, 2, 3 into the last candle of the first hour that engulfs the highest bull candle, which was the first candle of the hour, on a pin hammer back stop hunting traders who may be long. The market then breaks out on the first candle of the London session, goes sideways, and then we get a pin hammer, which is also an engulfment of the 1, 2, 3. Traders may have obviously taken that long. This was the third candle of the second hour, but that move went up 100 pips. So again, just using high bull, low bear, redrawing our lines, high and low. We have a low and we have a high. 1, 2, 3, hit the high again, sideways. Traders have possibly been caught chasing this short, reversal, pin, hammer, engulfment for a 100 pip move up. 1 bar stop. Then we come up. And as we follow these bull candles up, you'll notice none of them have been broken until we get up to the top. The highest bull candle. And again, just timings, paying attention to the clock, the hourly rotation. So we have an existing profitable trade from the London session. We have a high bull candle that has now been broken and closed below on the 4th candle after the highest bull. The market then proceeds to drop off double zeros all the way back down into the US session 12 candle window, stop hunting traders that were long and taking out the low of that candle. So again, the difference noticing as well, these markets both did similar movements. The range difference between the profitable trade and the high bull was a little less on the pound Aussie. The pound New Zealand had already extended out, but 2 things to pay attention to. Redraw your boxes. You're just waiting for your high and low to be reestablished so that then you have a thesis to be able to trade for. The market moves up 100 pips. And again, 3-hour window. We extended out 1, 2, 3, 4, 1 hour, 1, 2, 3, 4, 2 hours, 1, 2, 3 engulfment, 4 candles, 3 hours, and then we head into our 12 candle US session window. Some traders would have already been in short heading into that prior to the US session 12 candle window because of the engulfment and the timings. That market dropped down 75, 100 pips before going into consolidation and then being spiked out. So now we have an existing high bull as we head into today's Asian session. And we have an existing low bear from yesterday's Asian session and after the news. So again, we have our consolidation now. We're inside of 2 peak formations, and this will give us some insight. And these are also existing profitable positions potentially for other traders. We'll look at one more. Pound Canadian. So again, we talk about the previous day's high and low. The market was in consolidation. We have obviously a high bull and a low bear in a very tight consolidation. This isn't something really that I mark these often. I wait for the market to move out. But again, we have our normal high and low. We head into our 12 candle window, and you'll notice again we're inside of a 25 pip increment box. The market in that first hour stays inside of that 69.50 level. So we go down to the bottom of that 25 pip box before going 1, 2, 3 into the London Open, pinning the top of that box on a stop hunt on traders that were potentially short before dropping down below 69.50. Traders would have shorted this on the break of the London Open candle potentially. And we have a 1, 2, sideways 3 bull pin hammer at the low of that 25 pip box. So again, I mentioned that the average stop hunt is 25 to 50 pips. We're in our 12 candle window. This is the second candle of the 3rd hour. We get a 3-bar engulfment in one candle, and then sideways price action where they've pinned the high and pulled back for a bear trap. They break the lows of the bear pin before reversing and then moving up to the high. So again, I'm not saying that this is a perfectly tradable situation. We're talking about the high bull and the low bear, and we're just walking through, and again, just little simple concepts. 25 pip box, 1, 2, 3, 1, 2, 3, 25 pip stop hunt, reversal, bear trap, and then an engulfment for a 50 pip move. But now we have a low bear that's been engulfed. So again, this bear bull pin combination, they're both very similar, but we'll mark off our high bear for all intensive purposes. We know that there's an existing profitable trade in place. They've gone up, gone sideways, and again, timings, hourly rotation, we're into our second 3-hour window. The market goes sideways after a 50 pip move. We talked about that. We get a break of the highest bull candle low and a close below it. We have an engulfment of the highest bull candle, and then the breakout doji off numbers into the 12 candle window. So who's in profit? We have our existing long traders, and this is where we talk about structure and measured moves. So again, the market drops down in our 12 candle window, bear pin hammer off of round numbers at 69.50 for a 50 pip move down. So this market actually, traders possibly were short up near the break of the engulfment off numbers, and then traders were again able to position themselves in. This bear pin is a stop hunt on traders who are short off of numbers inside of the profitable trade, having not yet stopped it out for the measured move continuation down through the lows, down through the round numbers. So hopefully you got some value from today's video, traders. Just little tips and tools. Highest bull candle, mark them off. If they're violated, then they're no longer technically valid. This is a great example right here of when a market trades back inside of an existing low bear. They're going to take it out. They're going to continue that move. And remember, who's in profit? How big is the box we're trading in? Did the market break out? Is it a stop hunt? Is it a breakout of a high or low of the day? Are we up near the high of the week when this high bull or low bear candle presents? Are we at the extremes? So this is a great example. We're at the high of the week. Sideways consolidation after a 50 pip plus move. Engulfment heading into the next 12 candle window. We have an existing short trade in place. The measured move continues. Bear pin hammer off of round numbers, hitting stops, and then extending the move for a measured move. Keep it simple, traders. Stay disciplined, stay focused. Just focus on the basics and keep it simple. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.